Thanks everyone for coming. So just to introduce myself, I'm Andrew from Links Collective. Links Collective is a community of startup founders. We do events, workshops, talks, socials, things like that to support the New York City startup ecosystem. We've been doing a lot of VC talks. I know some of you have been there at some of them. The goal of these VC talks is really to introduce you to VCs, to get a sense of how they invest and what their jobs are. Most of you are startup founders, so hopefully you'll find that interesting. Our events focus, the VC events focus on trying to bring different perspectives. So different VCs invest in different ways, have different ways of investing. And so we want to highlight different investors in the New York City ecosystem that are supporting founders through not only investing, but supporting them in their growth. And so, yeah, we're excited to have Susannah Shipton from AlleyCorp. I'll ask her to introduce herself, but if you don't know AlleyCorp or you're new to New York City, AlleyCorp has been maybe the most consequential VC and incubator in the city, and it was critical for the last 20, 25 years to develop New York City as a tech ecosystem. So they're a core component to this, how all of New York City tech works. So we're excited to have do this talk here. So first, let's welcome Susannah Shipton for that.
Thanks.
She's very uncomfortable with all the attention, so we're excited to have a spotlight here. But maybe to start, could you just give some of your personal background?
Yeah.
And like what you've done before, and then how you ended up making your way to AlleyCorp. I think that as a setting would be good to start the talk so people kind of have a sense of where you come from.
Yeah, absolutely. So nice to see everyone. Thanks for joining. Yeah, so one thing that I really love about entrepreneurship and venture capital is that it's a very circuitous world. And I think one of the things I find most inspiring is that every single day I meet people who didn't start in either field and actually maybe had no intention to be in either field, but were just out there doing really interesting things. And I firmly believe like the best founders and the best VCs kind of fall into those camps. I never necessarily thought I'd be a VC. I grew up in Boston and was very much like a liberal arts person, went to Princeton nearby and majored in medieval history of all things. And like in college, I was convinced that women's literacy in pre-modern France was the most important thing. It's awesome. And then after college, I did a kind of fellowship program called Princeton in Asia, moved to Laos for a year and a half, which I think was also like not necessarily in the carved plan, but that's actually where I got introduced to the startup ecosystem on a trip to Myanmar, and generally like just found the ecosystem there to be very, very vibrant. Came back to New York, ended up at a company called Artsy, which was one of the sort of like 2014, 2015 New York tech darlings, still a great company. Was there kind of very early around the Series A and then stayed for 5 years through the Series D, and was very much like a GM, generalist, and was thinking about either going to a different startup or doing some kind of investing. And I happened to meet Kevin and the team here, and it's just a really nice fit in terms of we stay very close to the operating side. Everyone has an operator background, and we incubate, but also write checks. So been here for five or so years, and we've kind of been a startup ourselves. I mean, Kevin's been investing for a really long time, but when I joined, we were 3 people, and now we're around 30. So we've really expanded our practice and taken on some external capital for the first time. So it's been exciting learning for me as well.
That's great. So by 3 to 30, you mean on the investing side versus the incubating side, or total? Oh, really?
Yeah.
Okay, that's interesting. I didn't know it was.
Yeah. So in 2019, it was a smaller team. Brenton, who leads our healthcare team, had just joined, and then I guess we were 4. Wendy, who now leads one of our kind of most exciting companies, was leading the generalist side, and yeah, we were just sort of the early team around Kevin, thinking about new ideas, and then just made sense to institutionalize. We were seeing a lot of really interesting things. So now we have kind of a few more dedicated practice areas. I sit in our general fund, really exciting title, and we do consumer and B2B, broadly. We also have a deep tech fund, and then healthcare and impact as well.
Awesome. And so can you talk a little bit about AlleyCorp's history? So, it's been a long history,
Yeah.
but to give everybody a sense of how Kevin started, what were some of the success stories of AlleyCorp as you've gotten to this point?
Yeah. So Kevin Ryan is a prolific serial New York entrepreneur. He's probably best known for founding MongoDB, which is public on the NASDAQ, about a 30 billion market cap, give or take, on the day. And then also he's responsible for founding Gilt Group on the fashion side, Zola on the wedding side, Business Insider on the media side, and then several other companies which are now kind of infancy to big, somewhere in the incubation track. So he'd built up a pretty prolific career himself. He actually came from a operator background. He was a CFO, and he's a very sort of unique person in that he can see opportunities across a wide range of industries. So he's truly like the only person I know. All of us are trying to learn this, but who's can look, frankly, at the world and say, there's an opportunity here, there's an opportunity here, there's an opportunity here. He founded MongoDB, Gilt Group, and Business Insider like in the same year, which meant that he had a vision for reinventing databases, reinventing media, and reinventing fashion all at the same time. That's beyond many of us. So yeah, that's kind of the ethos, the prolific creative ethos that sits behind AlleyCorp that's very present today. And so he'd been angel investing for a long time. 2019, 2018, we kind of built up more of like a firm presence. And then since then, we are fortunate to work with some strategic LPs, and we invest on their behalf. And then we also still invest Kevin's personal capital.
Yeah, so maybe you can talk about that. So recently you announced that you've raised $250 million fund from outside capital, which was the first. I think a lot of people were surprised that was the first time.
Yeah.
People who didn't really know that was the first time taking outside capital. What is the idea behind taking that outside capital?
It's really to become just kind of a long-standing firm. A lot of people don't know that Bessemer or Venrock, some of the best-known names out there actually started as family offices, and then at some point decided, Box Group is another one, decided to take on outside capital. So I think it's sort of one way of just, Kevin plans to be in the ecosystem for a long time, but sort of planting a flag in the ground and making the statement that AlleyCorp will be here for generations.
Yeah, and beyond Kevin's time and
exactly, yeah.
Got it.
And he also actually purchased a building in Soho where offices will be moving. So that will be hopefully a very vibrant kind of startup community as well. And the firm will be based there starting in Q1.
Awesome. And on the investing side, what's AlleyCorp's unique approach? Obviously a lot of venture investors kind of look for similar things, but would you say that there's some angle or approach that you all take that is more unique than other firms?
Yeah, I think a lot of what we do is really informed by our incubation work. And we look at all sorts of industries, sort of dual tracking, like what are the interesting businesses here? And then also, is there a gap in the market where we could start something? And so I think because we sort of have those two engines running in parallel, we are able to either see opportunities that don't exist in the market or sort of push the boundaries with the companies that we are looking at and say, have you thought about this? Have you thought about that? We've actually thought about this space a lot with entrepreneurial spirit. And I think some firms, some very successfully take sort of a lighter, less research-based approach to writing checks. And so I think that ends up being where we drive a lot of value is we tend to know markets pretty intimately.
Yeah.
And then we really have that startup building expertise very natively in-house. So we look for companies where we can really make a difference and where we can be really involved. We're definitely not passive investors.
Yeah, does that come from the incubation side, like the heritage of incubating? How much does that meld together, post writing a check?
A fair amount. I think, for early stage investors, an early stage investor, the earliest they can go is pre-seed, which means an idea exists and a team is in place. And we've found companies before either of those things are true. So I think we have this whole set of experiences that exist before the experience of a lot of like even pre-seed investors, mistakes made, things that went well, frameworks that we think about, how to think about talent, the list goes on. And I think like those lessons apply well past that like stage of nascency. So yeah, it's always very interesting. It's challenge. We can talk a little bit about doing both at the same time, but I think they're both, it's both very complementary and sort of a push and pull in terms of like how you think about things and spend your time.
And when you think about some of that deep research that you've done, and obviously being in markets in different sectors, what are the big kind of societal or technological trends, shifts that you're seeing that lead you to inform your investing? What are some of those interesting trends besides AI?
I'll start, AI. Yeah. I mean, we were saying earlier, like my take on AI right now is actually quite horizontal. So I'm looking for either application layer companies with strong business fundamentals that are enabled by AI, or just sort of horizontal trends that are obvious. I think it's very hard for investors to learn 50 different industries at once and try to understand how AI is going to push them forward. It's, to me, a fool's errand. I think we think a lot about small businesses and how AI will affect them. I do feel very bullish on that thesis. I've done a few investments in the creator economy and kind of the independent workforce space. I feel very strongly about that. Longevity, complementary, and alternative wellness and medicine is a space I'm following really closely, growing super fast, well paced to outrun mental health in terms of market size. And I think the consumer and enterprise signals are really strong. And we sort of make it our business to look in areas where other people aren't looking. You see that with like fashion or media or even databases in 2007 was not the most sort of thought of thing. So we tend to sort of like look in shady corners and find interesting ideas there.
On the mental health and health side, what do you think has been a shift that's happened, or is there a catalyst that has brought over some sort of change?
Yeah, I think it's a few things. I mean, COVID was definitely an accelerant. I've been thinking about a few different business ideas since like 2017, 2018 in the space, and definitely wasn't the time now. And I've been really surprised at how quickly the market has moved. I'm building a thesis right now in complementary and alternative specifically, which I consider to be on the licensed side, acupuncture, chiropractic, occupational therapy, massage therapy, bodywork, physical therapy. We have a huge and growing workforce, mostly independent, some covered by insurance, some not, but a trend towards insurance. And so, I think there's a very possible model there for like a Headway or, kind of an MSO. So we're not precious about ideas, so that's an idea I'm thinking about. Would love your feedback. And then, you just see really strong trends like on the enterprise adoption side, but then really on the consumer side, it's a consumer-driven trend. And I think those are some of the most powerful. Both in like healthcare and outside.
And are those, COVID's a unique one because it might have been like kind of a big event. But some of these trends tend to be like creep up on you or creep up on society and come up.
Yeah, I think there's some more, there's some other things like 1 in 3 healthcare workers say they're considering leaving the workforce. There's going to be a, shortage of millions of workers very, very soon. Rise of aesthetics is one that we all follow, not just Botox, medical acupuncture, all sorts of things. And then I think, to some extent, a distrust of traditional healthcare that was driven by COVID and is also sort of influenced by that growing shortage and just feeling like the system is really, really stretched. And it's been interesting to see like even some of the most traditional hospitals who are super clinical are now saying, okay, we can have an integrative unit because consumers want it. So
that's interesting.
Those are the types of signs that we start to look for.
And just just out of curiosity, when you're doing that deep research, how are you keeping trends on the real ground level of what's going on and how these trends, besides like the broader surveys of like what you quoted a couple surveys, but besides that, how do you get deeper into understanding like what's really happening outside, like especially a New York City bubble?
I call practitioners.
I
have a Rolodex of like 100 practitioners that I've been calling. So I talk to the potential customers on both sides. So I'll run consumer surveys and then I'll also just try to get very direct data from the people we'd be thinking about serving. What's too expensive? What's painful for you? What takes too much time? If something changed in this system, like what would you adopt faster? All of those questions give us sort of clues as to like what parts of the stack are interesting to innovate. Like the insurance space is very, very interesting, I think, in the complementary market. So we take like hundreds of pages of notes.
Got it. So it's not dissimilar to what you would expect founders to do and that primary research
Very
and hearing
similar.
it directly.
Very similar, and like we would place those same kinds of phone calls if we were evaluating a company too.
Yeah, it's interesting because we've heard from other VCs, right? You have a thesis and you have a very clear viewpoint on where something is trending. And when you meet up a startup that has kind of reached the same conclusion, I'm sure it starts to marry up and be interesting as an investment if you kind of reach similar conclusions, right?
Yeah. No, I mean, we're very open with the fact that we incubate, and we've never really had a situation where we were like incubating the exact same thing as a startup we saw. But it tends to be a net positive for founders we meet that we've already thought about a space pretty deeply. And we can say, have you thought about this? You want my notes? What about that? Do you want to be introduced to some people? So that tends to be kind of a productive thing.
Got it. I want to shift gears a little bit. A lot of the value of these talks is many founders haven't been on the investor side. You've been kind of on both as an operator and a founder. So I'll bet you if you went and founded a company, you'd have a lot of insight into what the investor is thinking. So we try to illuminate that a lot. And when you think about your role now, so you're a partner now at AlleyCorp. Actually, what might be helpful is how you started at AlleyCorp. The things you were doing then would be just interesting because you weren't always a partner at AlleyCorp. You didn't start as a partner, right?
Yeah, I joined fresh out of kind of my operating journey at Artsy. Was like really not set on VC. Was maybe going to go operate, but Kevin, I just got to really know Kevin in the firm and loved what was happening here. And so my first role was really kind of like a GM. I did a lot of work on the platform side, actually, building out our community, building out just like how we work as a firm, a lot of which is still in place today, although my teammates are making it better. And just thinking about like, if we were to build the bigger AlleyCorp, the more institutional AlleyCorp, what would that look like? We were really putting all of our investments together, and like when you're a family office, you don't do the IRR calculations really. You just, you have some sense, but like you don't have to be as on top of it. So we kind of started doing all of that and really just putting the infrastructure in place for the longer term journey. And I started writing checks in parallel, started spending more time with founders, and of anyone on the team, I probably am investing and incubating 99% of my time, but I still have some part of my brain on like, how can we work better as a firm? Who should we be hiring as a firm? Like what should we be doing to better the New York ecosystem? Like I still have that, still very much have that sort of passion for firm building. So that's been a special treat to just be able to do that the whole time.
Yeah, that's interesting because that's not, we'll get into it in a little bit, but that's not every partner's journey either.
Yeah, it's circuitous.
Yeah,
that's the
so it's, and talking about your time, like how would you break down your time? So you've already mentioned the deep research, but if you can think about a pie chart of your time on a standard week, I think, and the reason I ask this question is it's helpful for people to understand how you spend your time and where it's allocated, and that's what your job actually is.
It kind of depends on the season. I was seeing like right now, a lot of our portfolio companies are fundraising. So I'm spending a bunch of time with them, making investor introductions, figuring out like what kind of round we want to put together. And then sometimes like our portfolio companies could benefit from strategic support. So I'll spend a good amount of time there. So I'd say, I don't know, maybe a third of my time is there. And then like a good chunk, more than a third, is meeting new companies all the time, many per day, many per week, a lot in AI right now, a lot in other verticals right now. And then, probably like 15% of my time is spent with other investors. We see a lot of new opportunities that way, but it's also really good for us to just keep building our ecosystem because we're a very collaborative firm, and I think any investment opportunity that we enter into, we're also really thoughtful about who's around the table. And when we build out our own cap tables and our own rounds, like it's all better when you have other firms that you really like working with. So there's a good amount of time that we spend on that side too.
Got it. And in terms of the other people on the investment team, you've got your associates and other folks, like what roles do they play versus what you're playing?
So AlleyCorp is a pretty like full stack firm. There's some firms where like associates source and partners do a little bit of sourcing, but really just look at things. We're not like that. Most people do everything from sourcing through all of their own deal diligence, all of their own board seats, et cetera. And I actually think that's really important because you just do all of the work.
Yeah.
And so like I see opportunities from a wide variety of sources, and sometimes it'll be an associate on our team. But generally, I think we run a very sort of full stack process. So a good amount of my time is spent sitting on boards, actually. That's something that maybe more partner or principal level people tend to do. But the associates here have a ton of autonomy. It's like what draws people to the firm. It's a very independent place, sort of like build your own adventure and go for it. So that tends to be the spirit.
Got it. And how many like pitches are you seeing a week, would you say?
This week, probably like, I'd say like probably, I don't know, 3 or 4 a day,
yeah.
But there are some weeks when that's not a lot less.
Yeah.
It's like really seasonal. At the max, maybe like, I don't know, 5 you're looking at.
Got it.
A day.
And if you thought about in a given week, 20 to 30, let's just say you're 15 to 25, if you thought about a pie chart of where you got introduced or where that got sourced from, how would you break that down?
Yeah, probably a third other VCs, a third founders, and a third sourced. So a third like I reached out. Or someone on our team reached out.
And what does that look like? They heard about a company, or they
sometimes a VC will say like, I love this company, they're too early, too late, not in our area of focus, or I'm doing this deal, do you want to do it? And we're like, which is always fun to do it with friends. Often other founders, hey, my friend is thinking about starting a company, do you want to talk to them before they've even founded it? We're always game for that. Hey, someone who's still at Datadog has a great idea, do you want to learn about it? They're like, yeah, you should leave Datadog and do this and with us. So a lot of those types of conversations, a lot of like preemptive, sometimes the company doesn't exist. I love talking to people before they leave their jobs and convincing them to. It's a favorite activity. I think like it's a good time to talk to people when like they're in a job, they see a pain point really clearly in their job and they're thinking about starting to leave. We really look at that segment closely.
Got it. It's tough because you're getting pitches from a lot of different sources. I mean, I'm sure inbound the whole team gets thousands, probably. So they have to somehow filter them out. What do you think about when people email you cold or send you a cold LinkedIn message or pitch? Like, how do you, knowing that you're getting all these different sources, like, how do you value that compared to other pitches?
I think I look at every cold pitch, LinkedIn, email, I look at all of them. I think that sometimes, like, because the flow, there is a lot of inbound, it can be helpful if there's someone who knows someone who says, like, flagging this person.
Yeah.
It's not necessary, though, but it can be helpful just to, like, help it sort of rise in terms of awareness. But we do a lot of outbound opportunistic sourcing. We do a lot of just, like, we'll be looking at a space and I will want to meet every company in that space, even ones that are too late, so I can learn. So we do probably a lot more outbound than most firms do.
Yeah, I think that's what a lot of people misunderstand about the VC role. Oftentimes people think VCs are on their throne and people are coming to pitch them. No, it's like a sales job. You have to go out there and like grind.
Yeah.
Just as much a founder is grinding to meet VCs, right?
Yeah, and it's very much a two-way relationship. I think the brightest founders need to like their VCs. It's like a marriage. It's a long relationship. And I think, should a VC be so lucky to work with a founder, like they usually have to convince a founder that they're a good choice. And so we do a lot of like thinking about how to, like put money and resources behind that statement.
Yeah.
And I do a lot of like thinking and learning about how to be a better board member, observer, supporter to our companies, because it's very much a two-way relationship and two-way sell.
Yeah, I'm sure part of your sell is that you were an operator, so it's not like you don't understand their problems and you can help them as an operator. And by the way, what percentage, if you had to guess how many investors were operators, what would you guess that percentage is?
I feel like less than a third.
Yeah, it's pretty low, right?
Yeah, it's pretty low.
Yeah.
I would think it's lower in SF than it is here.
Yeah.
Yeah, maybe a third.
Interesting. And yeah, so when you bring, what's your pitch to them as you're coming as an operator, or how do you work with them?
You guys can give me feedback on it.
Yeah.
I mean, look, like Series A, which is when I joined, Artsy, is not like the earliest that you can join companies. So like there's things I missed. But I spent a ton of time fundraising. That was like one of my main jobs. I spent a ton of time setting up new business units. I spent a ton of time like helping our team leads build out their functional teams. So like hiring our head of sales, figuring out if we needed a secondary market person. Was very much sort of that like person sitting with the CEO building new things. And so that's just naturally how my brain has been wired for years, and that's very much what I do with founders. And then I think like the fact that we incubate tends to be really helpful. I've had to come up with ideas. I enjoy coming up with ideas. I've come up with ideas that have done really well. I've come up with ones that have failed. I have a lot of learnings from both. I pitch to customers all the time. I talk to potential customers to try to learn. We fundraise for our incubations and have VCs say yes, no, maybe. So like all of that, just very acute founder experience. We do live pretty like, we live it right now with our companies, and we tend to be very like sort of present in the market, hearing directly from our incubations what's happening.
Got it. And how does that, when you're making investments and you're evaluating founders, how does that operator's perspective change how you view that? Like, is there different insights or different things you're looking for that you think come from that operating side versus just like a pure investor?
Extreme respect for the journey and how challenging it is, both to like come up with an idea, but I think even more importantly to hire and inspire people to come work with you when like the company is nothing. That's I think the hardest part. Like we're really not precious about ideas in our incubation practice. We go all day long saying exactly what we're thinking about, just like I did. I might get in trouble for that. but like we truly believe that the special sauce is in execution and a founder's ability to bring together amazing teams, because in a very short time, the founder's not doing everything. And if you have like great people at the table in all your verticals, like that's really huge.
Yeah.
So.
Yeah, I don't know why founders don't spend more time on just like recruiting and getting talent. It's like after the first few people, you can't do anything but hire the people who are going to do the work, build the product, sell the product. So
yeah, it's something I really push our early companies on, and I think it's like one of the things, if not the top thing, that we sort of evaluate when we look at founders is like, can this person inspire other people to come do this thing when there's nothing there? Yeah, and keep inspiring them, for the long haul.
Now, you have a lot of data points, or AlleyCorp and you have a lot of data points on successful teams. Besides what you just mentioned, what are other characteristics you see in founders that lead to like them being successful founders?
I would put that at like number one, honestly.
Yeah.
I've seen founders and worked with founders who really lack
charisma.
Well, just
I don't know.
You need
persuasion.
Charisma, but like executional expertise or background in a certain space. Great, you can hire someone for that. Like, you can't hire that pure like tenacity of spirit and heart. Enjoyment of others, heart, like motivational abilities. So that's really high up there. I think like strong commitment to an idea, but flexibility around it. I think another like hard line, and we struggle with it in our incubation practice as well, is like to be really passionate and forceful about an idea, but then also to know when you need to course correct or adjust or pivot or hear feedback from customers. I think like customer obsessiveness is another one. I think another pitfall is we'll sometimes see founders who get really excited about the product that they're going to build, but then when you try to connect that to the end customer, there's a disconnect there, and it's not like what they really need. So I think an obsession with the customer. Ramp does this really well, but like their customer support team reports into product and has for the entire journey. And if you look at a chart of the growth in customers and the growth in customer support tickets over time, the customer support tickets is like this and the customer growth is like this. And I think that's a super inspiring chart. And ideally, like what every company should strive to do is continue to serve the customer as the customer base grows.
Great. I want to ask one more question before opening up to the audience. In terms of many of the founders here are going through the fundraising process or thinking about going through it, what's the advice that you have for them? Either it's like common mistakes you see founders make, or great things that founders do that really catch your attention or do well. And so far I heard a couple things. One is what you just mentioned, being able to tell a persuasive story and pitch, because the investor isn't persuaded, how are you going to persuade any customer or employee to come on board? But what else what other advice would you give founders for fundraising?
There's a framework that lives in my head, I should probably write it down, that I use with every incubation and every company that we look at. There's 4 parts. The first is, I really want to understand who the incumbent is in the space. Who's the big, giant, crusty company out there that's like doing what the founder's trying to do, but horribly, and the customers hate it. I try to get a really good understanding, like how is it growing, what's their product velocity, all of that. Then I really try to understand acutely, like what is the visceral pain that this crusty incumbent is causing? You know, why are its customers suffering? Why are they churning? You know, what's the base that's really not happy here? And then I try to understand, okay, if both those things check off, what's the fundamental shift going on in society we talked about that's going to, really push this company forward? So that could be, when YouTube was founded, bandwidth prices tanked, and that's why video was suddenly very viable. I think there's a lot of trends like that right now with AI, obviously big ones, rise of mobile, blah, blah, blah. But that big shift that's going to, provide tailwinds. And then I really try to understand who the beachhead customer segment is and get confident around that. And so I think if the founder communicates all of those 4 things really, really well, that does a great job in sort of getting me to conviction around like, okay, this is super viable. MongoDB, for instance, like the big crusty incumbent was Oracle. They were super expensive, doing it terribly. Pain point, they weren't serving startups, they weren't serving nonprofits. That's really where they entered the market. Now Goldman Sachs uses them, but like at the time, that's where the pain was. The shift was towards databases that don't use SQL. So that was like a new and exciting thing then. And then the ignored customer was those like small businesses who just couldn't afford exorbitant prices. And I could run through that matrix with like every company I've invested in, every company we founded. So that's how I think about it. But I think like, understanding the market and really understanding the customer pain. And then I always ask like, okay, if you're a solo founder or 2 of you, like who are the next 10 people you're going to hire? Like, let's see their LinkedIns. Have you talked to them? What do they say? And then I also call up customers and talk to them.
Right. Before we do questions, I'm just show of hands. I'm curious, because we were joking about AI earlier. Who's working on a startup that doesn't relate to AI, or AI is not in their pitch? Okay, there's more than I thought. I just feel like everyone's working on an AI thing. Okay, so questions from the audience. Let's start. Tice, is it?
Yeah. Wow, so good. Actually, just like the last thing you said about beachhead customers. So we're, like you said, like looking to fundraise sometime the next month or 2, like maybe an angel round or something. And our beachhead customers. So we're in construction tech. We're going to sell to architects as our go-to-market customer. They are really excited about the product.
Mm-hmm.
They want to pay for it, but they're not like big spenders on technology. They're billable hours kind of thing. So when your initial go-to-market customer is enthusiastic but doesn't have a big budget, but you have plans for new customers down the road, how do you tell that story when you're very, very early stage?
Yeah, I think it's super common. I think getting a potential customer to say I would pay $10 a month to try this out. I would pay $30 a year. Some amount of money. It doesn't even matter what it is. MongoDB didn't make money for 3.5 years, which I don't know if that would fly now, but it worked. But I think getting some signal around people will pay for this, and also the ability for potential enthusiastic customers to pick up the phone when an investor calls and say, this is something I'm dying for. I really, really need it. There's also ways to put costs on the customer in a interesting way. I'm not super familiar with the kind of architecture world, but I think just getting signal around this is a terrible, terrible pain, and helping that customer express it to the investor will almost that will help get over the sort of budgetary lump. But I do think the fact that someone will pay for it over time is super important. So just painting the story there around TAM expansion.
Okay. Question over here.
Hi, Colette Ellis, founder of Libby Health. I was intrigued by your comment around alternative wellness and kind of surpassing mental health in a way. I'm wondering what you think about the intersection. So we're focused on a solution that is bringing somatic healing, like tapping and breathwork to support mental health. So I'm just wondering what your thoughts are.
I think they're completely intertwined. Yeah, I think they're completely intertwined. I think if I talk about sort of the behavioral health market, which I don't think it's right, but tends to be characterized as people seeing a talk therapist. That market size, headway, growth therapy, it's huge. But actually the CAM market is, half, a third of the size, but growing a lot faster. But they're totally intertwined, and I think the mental health market will be really, really enabled by alternative.
Let's do 2 more questions. Right there.
More on the MSO concepts. It's something I've been thinking about a lot. Are there specific characteristics you look for? Obviously you mentioned there being a big sort of consumer trend towards CAM, but other things that you think that could be MSO, we see these pop up around speech language pathologists and autism care, and every random thing you can think of, there seems to be an MSO idea. How do you think about the dynamics that make for a good MSO versus not that great of an MSO?
So I'm really living in this world right now, so I do have thoughts. So I get a little skittish around, there's so many really interesting opportunities in healthcare. I get a little skittish around verticals that are just the market size isn't huge. And so there's always an argument that can be made of if a customer segment is really, really, really passionate, a company can take enough market share to make it interesting. So there's a bunch that have sprung up in nutrition. I think in 5 years, 10 years, actually, nutrition will be huge, especially with GLP-1s. Right now, I'm a little I go on Faye, which is a new one. I go on Nourish, and I sort for New York, and there's 5 people. I'm that can't be possible, right? But I think what makes it super ripe for an MSO is large insurance adoption, and I think mental health has really moved in the right direction there. Certain other, occupational therapy is one I'm thinking a lot about because that's covered. I haven't really seen that one exist. We have seen them for autism care. We've seen a couple actually in the addiction space. But part of the reason I'm looking at the sort of complementary and alternative is that we really think about building for the next 5 to 10 years. So that's why I think the nutrition ones, even though they're hard today, they'll work because they're building into a growing market. I think when I look at the coverage dynamics of CAM, they're very similar to what I've seen in mental health and fertility, where they started out as bespoke. You got them through blue chip employers. Would love your thoughts on this. But you've really seen them turn more mass market, and lots of creative ways to pay for them. And I think the similar thing will happen in the sort of complementary space. Acupuncture's covered in a lot of cases, as is chiropractic, sports medicine. So I think the market will just move that way. So, yeah, but it's a really interesting space.
Let's do one last question. Over here.
Hi.
Hi.
You said something about competition. I found market segment competition doesn't care about. All big companies in language industry, because they care about localization. If they do interpretation, they target clients who have obligation to provide interpretation for immigrants, and the business-to-business market is totally not covered. If they cover business market, they offer business interpreter. They do not care about making match based on the industry. So I'm targeting that business segment. Should I call those big companies competition or not?
So I don't know a ton about this space specifically, so I'm not sure. I think we worry a little bit about competition at AlleyCorp, but in addition to not being precious about ideas, if your product is good enough, doesn't really matter what the competition is, big, small. And I get excited when the competition in a space was founded in 1999. That's perfect. We rub our hands together. So I think that's a really if it was founded 3 years ago and it's raised a ton of money, or there's 5 of them, that makes me really nervous. But even if you look at Headway, Growth Therapy is doing exactly the same thing. They've both raised huge rounds and have big markets, and so sometimes there's room for many. So I always look at how many of these companies do I think there can be? Is there going to be one dominating player, or can there be many? And then also how crusty is the incumbent, and how excited am I to make them go away?
How crusty is the incumbent? That's the quote of the day.
Yeah.
The crusty
I don't
factor.
know why that's the word I always use.
It is, because they're crusty. It's what's one last question for you is what's the best way for founders to get in touch with you or your team?
Just my name at AlleyCorp.com.
Okay. And then is there, I know you can't stay a ton. We're going to have a little reception.
Yeah, I'll be here.
You can stay, but is there anyone else on your team here that you would identify?
Good question. I'll poke around.
So that it's not just you being mom.
No. People, I didn't do a very good job of.
No, it's okay. I just wanted to recognize other people if they are.
I will be the first to admit if a space is not a vertical where I'm an expert, and that's why we have more of a sort of expanded practice. So I will definitely I'm happy to follow up with other people's emails. We have a deep tech practice, healthcare, they're way smarter than I am on that subject, and impact, which broadly we define as workforce development, education, and a bunch of other things. So I'll be very happy to pull in other people via email down the line.
Awesome. Well, thank you so much for doing this, and thank you so much for hosting.
Thanks so much for joining.
We appreciate it.
Appreciate it.